Hello, folks. Brandon Chapman with you today. It's a Tuesday video. Monday was a holiday, so they bumped me to Tuesday. Going to be with you. First trading day of the year of 2023. We're kicking things off, and it did not go according to plan, at least for the bulls out there, as the market gapped early, looking more bullish and fading throughout the course of the day before rallying a little bit towards the end of the day. As we look at the SPY to reflect kind of that cash session today, again, you'll notice we came off of our lows and finishing at a level that I discussed in the video a little over 2 weeks ago. Back on the 19th, we had a 1.34 million share print in what's one trade for $380.99, setting the stage for this level as going to be significant in the near future. And so despite the volatility, despite the selling, despite the fact that Apple lost its $2 trillion status in terms of its market cap, it did not break that key level. We're basically closing right at it today. And so again, we're just still mulling around, figuring out where we're going to go over the next couple of weeks, as January tends to be a big time barometer for where the market will go for the year. Also, the Santa Claus rally. We got 1 day left tomorrow to see if we can produce a positive result as we go back here. The first trading day was on the 27th. We closed at on the 23rd at 382.891. Can we rally and produce a positive return for the Santa Claus rally? Again, it's still a possibility. It's still a very real possibility. Again, maybe the rally off our lows today is signaling that possibility. As we look at the top performers today, like PayPal, for example, it's catching a bit as it's running higher. Meta, driving communications, holding up here at resistance. So, I mean, there are some bullish stocks. Boeing catching a bounce here. Oracle, again, a dividend name as well. Disney, oversold stocks bouncing back. So we got more of a hodgepodge of oversold and trending companies in today's move, and we'll see where the next couple of weeks goes. One particular product that I've been kind of focusing on for the last couple of months, and I talked about at the end of the year, looking for a early rally, first couple weeks of January, maybe longer, in gold. And so we're trying to set up here is potentially a bearish setup for the market. The bearish setup is number one, the gold GLD, or gold generally rising, right? Number two, dollar rising. And number three, gold outperforming the S&P 500. And the idea with this, you're wondering, well, how can the dollar rise and gold rise? Isn't gold just a proxy for the dollar strength and weakness? Yes, right? So GLD rising here, this is GDX. Let me just bring up GLD. GLD rising is a reflection of what? A weak dollar today. Well, if you're looking at a weak dollar, how in the world is UUP rising? UUP is rising because why? The dollar is weakening or strengthening against the euro. And so you notice today we're breaking this trend line in the euro/US dollar, and we're heading lower. In fact, Blake did a class 2 weeks ago on currencies and being able to kind of trade some of these moves using futures as well. But this is a breakout in the direction of dollar strength, euro weakness. But the reality is that the dollar was also weak today relative to gold. So yes, gold's outperforming the euro, but the dollar is actually declining in value. Gold is rising, and this makes today's selling a little bit more weak than this shows. So if the dollar's down or gold's up 0.8%, we're down 0.4. That's about 1.2%. And as we look at the VIX today, the VIX was rising a little bit, came off of its highs, faded back just slightly. And so as we translate this, we can say, look, there is room for the market to rise. If gold is rising, there's a real chance that the S&P 500 may kind of get out of this box a little bit, push towards 390, 400, 4,000 on the SPX, whatever levels you want to draw there, or whatever product you want to use. It is still setting up, and it was encouraging to see if you want to see a little rally, like I do, you'd like to see it hold this level, which it, for the most part, did today. So do we start to see another test of the highs here at around 386 and push higher? If you look at the SPX is here at about 380.89, or today's high at about 38.79. Do we start to test the high? Do we start to break through tomorrow? I still think there's room or a possibility for a Santa Claus rally, albeit small, but positive. And so again, we'll see. But if we start to break support down here at about 3,800, now we're looking at the market rolling lower. SPY, that level would be what? I've been looking at this level right here at about 378.40. So we start to take this out and close below it. Now we might be garnering some bearish traction. Now, as we look at the VIX, and I'm going to look at the 3-month VIX against the 1-month, and we're going to see kind of what the market's pricing in terms of future volatility. Notice that back here on the 21st of December, we got relatively high, about 17% higher, meaning the 3-month VIX was about 17% higher than the 1-month VIX. Again, did not quite reach the threshold I normally look for of 1.2, and the market kind of slumped here the last little bit. And again, we kind of faded today, and this has been driving back down here, where again, the 3-month VIX is only 7% higher than the spot VIX. What is this telling you? It says, look, the market's not really pricing in a lot of volatility in the near term. And when you look at skew, and we'll see whether skew has risen or rose today or fell. Normally you see volatility rise, skew typically will fall. We haven't got the print. I guess it might take a little, we're close. I thought we'd be there, but no, 12:30, we haven't got today's print yet. But I want to see whether skew begins to build. If we can catch a rally off of this level and we see skew rise, this helps things set up. And this is really what the market's probably saying more than anything today. It's telling you that there's really legitimate fears of recession in 2023. Now, what does a recession mean? A recession means the Fed will have to reverse policy maybe at some point this year, maybe by the middle of this year. And that may help support prices as they begin to do that. And then we'll see whether other stuff gets unwound. And so there is optimism in certain areas, and specifically the area that probably should be the most optimistic right now is, of course, gold. And gold was higher today. I would expect gold to sell off a bit, maybe even retest lows, but it doesn't mean that during a seasonal period since 2014, gold has had a nice December into January. We stole a lot of the thunder here early, but we could push. And my target last week was looking at GLD between 173 to 177. It's reasonable we could continue to push here into that area maybe by the middle of January. And maybe that does set up the next sell-off in the market where the dollar really begins to strengthen in real terms and we see this break down. But remember, if the economy looks like we're heading towards recession, unemployment starts to pick up, it may pressure the Fed to pull back on policy, which will cause the dollar to weaken and will cause gold to surge again. And that's when you look at today's trading activity on GDX is where it popped up. You notice it's up about 3.5% today. Had a really nice day for the most part. You can kind of see where the market is beginning to position itself. Notice here this 55, 65, another tranche put on 55 and 65. That's for January 19th, 2024. So that's out there a bit. Obviously, wouldn't encourage people to necessarily trade these options, but hey, if you want a binary type trade, either, cost you what, 20, 25 cents. If GDX is at 65, you risk 25 cents to make 975. That may not be a bad deal. And in fact, the volatility is going for you. You're buying at 41%, selling at 43%. And so again, that type of trade is shaping up well, but it's relatively longer term. If gold makes a quick move towards 65, you'll still do well, but you're not going to realize the full $10 of value or the spread between the strike prices. But it didn't stop there. You look here, for example, 17 Feb 23 at the 40 strike, you see that's kind of reflecting buying at 9 cents. So if we come into 17 February, you'll see you're out here at $40. This is relatively shorter term, 45 days. That would take a rather quick pivot from the Federal Reserve for the GDX to hit 40. That's by February. So pie in the sky out here, but the rising term structure does make it favorable if you want to, buy a 31 and sell a 33, right? You're buying 39, selling 40. There's a little bit of edge in here due to the volatility, the rising volatility term structure on the call side to position yourself for a bullish vertical spread trade on GDX or GLD for that matter. But obviously, $40 is way up here. Could it get there? Yeah, I guess it's possible, but it would likely take a major reversal, a major pivot by the Federal Reserve. I'm not sure it's going to happen by February, but oftentimes people will buy these options and then they'll roll them if they don't get there, right? Because there's such a high reward to risk. Again, spreads are generally better than buying just a straight call. But again, I thought those were a couple of interesting trades. Looking at bullishness in GDX. Now, I will kind of mention, though, that today's trade is not as bullish as last year on the first trading day of the year, when we saw a couple of 100,000 contracts traded. So not quite as big, but still bullish, looking at, again, a nice end of year rally, or again, an early rally to 40 on GDX as well. So a couple of bullish trades, kind of, again, solidifying that potential that if the Fed kind of steps in it here, the dollar begins to weaken substantially. These are areas that should do well, even if the market generally doesn't. Now, as we look at the potential of hitting recession, what does that mean for oil? Oil was down about 4% today. We're kind of moving lower. You look at natural gas. After this cold front, a warmer front's coming in and kind of warming things back up again. Again, we're having trouble producing liquefied natural gas. Cheniere, if you look at LNG, I think they're still down. Again, big drop today, as again, we've seen this kind of boost in production of natural gas without a place to go. And so as you look at, stocks, in the energy space in XLE, notice that we're breaking today, right? So we have this little consolidation phase. We've yet to break support at around 83, but this is setting up for a bearish breakdown. And the two top market cap stocks as far as in XLE's Exxon and also Chevron CVX. However, do you go bold and go straight at these integrated, or do you look at maybe refiners like a VLO that finished near the lows today, breaking out of the channel? And this is based upon the idea that if there's slack in demand for gasoline and other distillate products, maybe we do warm up here. Maybe there's not as much demand for heating oil. All of a sudden, what happens is oil prices remain relatively high. The spread starts to narrow. We start to see a breakdown in refiners like a VLO, for example. Again, targeting maybe this low down here at 100 over the coming weeks. On the flip side, a stock that I was looking at, hit the target and ripped lower today was Tusk. Again, this provides like sand. So the idea is if energy begins to weaken, demand starts to slacken, do we start to see less? Do we start to see the rig count increase less demand for sands and other things and products? Because again, these were top performers last week in this kind of oil service space. But again, concerns maybe over production if oil prices stumble or kind of dragging these back. But Tusk is one that looks interesting on a retest of 550 again. And we may get there quickly based on today's trade. So again, we got this juxtaposition, strong gold, weaker oil, specifically energy stocks. Another one, let's kind of throw this in here, Southwestern. This is a natural gas stock. It had some bearish action today. It was actually as a roll. So you look at option time and sales, and you'll see this January 550 put rolled out and down to the $5 strike price for a 1 cent debit. So basically keeping the risk on the table, just moving the goalpost lower to $5, extending the time frame a little bit more. So again, this breakdown in natural gas. Again, this is a natural gas producer. We may see it by February down here below $5 again. All right, let's take a look at bonds today. So we look at TNX and what is the 10-year treasury doing? Again, what we're seeing is an inverted yield curve, which is historically bearish. But again, normally there's about a 13-month delay before you start to see that yield curve begin to price in recession generally. But again, we're seeing, a little bit of a dip in yield, which meant that what? Treasuries were being bought today, and we already have an inverted yield curve. Again, are we going to start to see, if you look at IRX, this is a 3-month T-bill, it's at 4.25%. TNX is down here at 3.79%. Do we continue to see this inverted yield curve perpetuate as the Fed is on schedule to raise, 50 to 75 basis points over the next 5 months? Again, that's a lot, and this may further invert the yield curve. So today's buying does suggest that maybe the Fed's not going to get to the upper echelon of 5%, which IRX would reflect that 5% Fed funds rate if they got there. So again, maybe the Fed will end up pulling back if the data starts to support it going into their February meeting. Let's circle back here and let's look at, as we wrap things up, TEVA. Again, there's a number of stocks that are higher today. I mean, PayPal is kind of interesting, but again, if we have this recessionary type pressure, how does that bode well for PayPal? And if we start to see defaults and unemployment rates start to tick up, the early optimism over here may be misplaced. But we look at TEVA. TEVA's in the healthcare sector, which was down today, middle of the pack performance, but it's also a generic provider of drugs. So TEVA breaking out today, volume was slightly above average, but opening at the low, closing almost near the high of the session. And this kind of picked up speed after I did my session earlier today. Yes, we do have some resistance up here about 960, but boy, we're starting to open up the potential. Can we hit 1050, maybe $11, retesting a couple of prior highs? Well, as we look at option activity today in Tesla, you look at today's option statistics, 53% at the ask, 4.4 times the average. Again, you look at option time and sales in here, and again, some of this stuff might reflect one or the other in terms of buying and selling, but this stuff occurring almost the exact same time here. I'm kind of going to go against and disagree with the fill there. Notice right here, 1045.14, 9.4, 9 cents is reflecting. Yes, that's reflecting in the bid. Traded the exact same time, likely part of the same trade. So again, this stuff isn't always perfectly accurate, but it does give you some guidance. My thought is that this 18,000 contracts are mostly bought at the 950 strike. Then you also saw some stuff bleeding out here in 13 Jan, the 6,300 contracts here at the $10 strike. So again, what are we looking at? Pretty key break point at 950 here may help pick up some gamma as we run back towards $10, which that's the 161% projection, taking this kind of initial wave right here and basically taking 161% of that, given the fact that this run failed as we retested or very close to retest the prior low. So this is our seed wave here today, kind of again breaking out, looking at $10. If you break 10, we're looking at 1050 to 11, going back to prior highs based on those fibs on TEVA. So again, interesting trade today in TEVA. Finally, we'll kind of wrap things up with Grab. Grab holdings. Now, you look at the highs, level at about 335. Our lows are rising. This is kind of an ascending triangle. This one didn't quite get there, but close. That one tagged it for the most part. You could draw it as a symmetrical triangle. Either scenario, today was a breakout day, and we did experience above average volume. Now, that by itself is kind of interesting, but it is a penny stock. What kind of opportunity is here? Now, as we look at the option trade was very significant. 100 times the average, the last 5 days, 5 times on the put. But again, look at all the calls that are traded today, 64% at the ask. You look at option time and sales, and you see all this massive quantity coming here at the ask for what? The 17 Feb 450. So when we come and we look at this expiration here, 46,000 contracts traded at 450, and probably some buying at 350s filtering as well. Right there, 438. You see that tranche there. So a lot of out of the money option buying at 350 at the money, 450 out of the money, 417 Feb. Now they're not going to announce earnings until March, I believe March 2nd. But the idea is this may have some opportunity to move as we break above 350. And then as you run towards 450 or break 450, boy, we could see a big move here. So this one's interesting. It's one that you could take, kind of a lottery ticket out of the money out here. Just thinking, maybe this thing does, maybe somebody knows something, whatever. But this is kind of unusual today on this kind of stock to see that amount of activity, 450, 350, that could create a big move if those start to move in the money, since they're very lopsided in nature. Anyway, so again, this is going to be an interesting year. I expect, that again, as we look forward in 2023, the VIX, there's a small chance we never get above 40. But this is kind of, we had 2020 back here. Again, what we've seen over the last year has been more about the idea of pricing in a higher Fed funds rate, higher interest rates, right? High debt levels, higher borrowing costs. We've yet to really price in a real pullback or recession. And by looking at Apple, you definitely can see that. As you're seeing, we're just starting to break support today. And if you were to look at their earnings, their projected earnings for this year, or even this quarter, or last quarter rather, that just finished, we've yet to see a real material cut in earnings expectations. And I think this is the poster child here of a company that's expectations are likely to shift. Of course, there was news today about Apple telling suppliers of components for AirPods or MacBook, things like that, to cool it, right? We're going to pull back on our needs for components. Again, what does that mean for Apple demand? We have their manufacturing plants in China supposedly back up to 100%. What happens when that undersupplied, the undersupplied market right now for iPhones starts to come back and now becomes oversupplied? So again, there's a lot of stuff that could happen here with Apple, and we're just starting to see a break. And if this continues to drop, it will drag the market down as it continues to lose not just its $2 trillion status. Will Apple, when it's all said and done this year, lose $1 trillion? It may not be out of the realm of possibility, as really just trading down here close to 60, 66 would put it in that position to accomplish that. Hey, folks, we'll wrap it up there. We'll catch you back next Monday. Thank you.